When a letter of credit is used, it's not just the buyer and seller involved. There are banks in between that make the entire trade safe and secure. Let's understand the main parties involved in a letter of credit. The applicant, also called the buyer, is the person who wants to buy goods from another country. The applicant wants to make sure that payment is made only after the goods are shipped correctly. So the buyer approaches their bank and asks for a LC. The beneficiary, also called the seller, is the person who sends the goods. The seller wants a guarantee that they will get paid after shipping the goods. When the seller receives the letter of credit from the bank, they feel safe to ship the goods. The issuing bank is the buyer's bank. This bank issues the letter of credit on behalf of the buyer. It promises the seller that payment will be made, but only if all the required documents are submitted correctly. This bank carries the main payment responsibility. The advising bank is usually the seller's bank. Its job is to receive the letter of credit from the issuing bank and inform the seller that the LC is genuine and authentic. The advising bank does not promise payment, but it helps build trust between both parties. These are the four main parties involved in LC transaction. In a letter of credit, the buyer wants safety, the seller wants payment security, and the banks act as trusted middlemen. Follow Money Behind Trade for more banking and trade finance explained simply.